I'm going to stay down on the flat here. It must have been middle of last year where John came and saw us in our office in North Sydney and said, well, I'd like to come up to Armidale in the middle of April and speak at the breed conference. I said, well, if you can guarantee me it's not a freezing cold morning, I'll be there. So John can do. But I mean, in all seriousness, I'm actually based out of Orange, so I'm used to cold mornings. But this is lovely out there, so maybe this time next year outside conference.
Maybe.
But look, what I've got for you today, and particularly from where I sit and how I look at things, I certainly can't tell you what the Hereford Society should be doing. But what I can tell you is what the global beef market and the Australian cattle market is doing. And at the moment, things are looking tough. I mean, as I said, sometimes there's some negatives to be said, and certainly at the moment, cattle prices are under pressure because there's a lot of cattle coming in at the moment. And that's in the wake of 3 wet years, a lot of rebuilding going on right across Australia. And at the moment, there's probably more areas that are dry and worried about which way the season's going compared to those who have had some good rain. It seems to be very much a case of the haves and have-nots. And unfortunately, driving up from Orange last night, I did most of it in the dark. So I couldn't really see what the country was like on the way up. But I know around where I am, Central Tablelands, geez, we need a drop of rain very, very soon. So what I'm going to talk about today is just give you a snapshot of just where the Australian cattle industry is at. And there's probably the 3 Ds are the main ones there. It's dry, it's the dollar, and demand is a worry. And I'll talk more about demand because we really need to split it. We always hear about this 2-speed Australian economy. There's nearly a 2-speed global beef market at the moment. Chilled and frozen. Chilled's the good stuff, frozen, I'm not saying it's not good stuff, but it's at a lower price and goes into the food service, and it's the hot product at the moment. And I'll talk more about that later, because that's where we are seeing the growth and, if you like, record returns at the moment. And it's certainly not a product that any of us here would be striving to produce. It's a product that we produce just as part of the carcass. I'll also talk about where will Australia's beef end up in coming years. And for those of you who've had your ear to the ground, the big moving market at the moment is China. So far this year, we have spent more beef to China than we have sent to Korea. It's all of a sudden moved into being our 3rd largest export market. But again, they're taking frozen product, not chilled beef. So the product they're taking is the one thing that everyone else wants too. But again, I'll talk more about that later. And I thought I'd end up on, and again, things to keep an eye on. It's not all bad news. It's not all negatives about the season and the dollar. There's certainly some positives out there. And I got caught saying the other week that the best thing going for the Australian beef industry at the moment is the state of the US cattle industry. And I've got some slides to just illustrate the position they are in and how the Australian industry can benefit on that in years ahead. So where are we at for the moment for cattle? Look, the herd is nearing, and I think possibly at its high at the moment. We went through 3 years of what we'd probably term pretty rapid rebuild. 4 to 5% growth in the herd each year. Wet years like we've had, you couldn't help but do it. And hearing numbers out of North Queensland where producers are going from 1,500 head to 2,500 head over those 3 years, the efforts have certainly been there, and I think it's right along, particularly the east coast of Northern Australia. We went into a rebuilding phase, but looking at the numbers we now are coming through for slaughter and the intention for producers, it has really tapered off, if not halted, that rebuild. Cattle slaughter has accelerated. I mean, it's certainly been evident in the cattle price. The cattle slaughter has accelerated. I think it was the week before Easter, we saw 82,000 head killed in Queensland. Now that's an indicative slaughter indicator that we use to just see how many cattle coming in. It had never been that high. So we're killing more cattle now than we have in a long, long time. And the seasonal outlook is mixed. If I have a look at the last 3-month rainfall outlook, wet along the east coast, pretty much like it has been the last 6 months. Those that have been getting rain are predicted to get more, which might be all right for the New England region, but those places that are dry weren't particularly looking rosy. So the supply, a lot more cattle coming in, as expected really, after so many wet years and a herd that is nearing 30 million head. And for Australia, that's a big cattle herd. Last time we were up there was mid-70s, and that's not a great time to be comparing to. Demand, look, conditions are weak. And you can trace it all back to the GFC and the global consumer in advanced markets, particularly where we sell our beef, advanced markets of Japan and Korea, they're pretty scared. They're tentative. They're hiding. They're waiting to be told things are all right. It's been going on now for 5, nearly 6 years. So conditions in Japan and Korea are weak. Russia, the world's biggest importing beef market. They import more beef than any other country in the world. They're not looking for Australian product at the moment because it's so cheap out of South America. So we've lost a market there where we were sending 80 to 90,000 tonnes of beef only 3 years ago. And Indonesia, the news on Indonesia, we're all aware of that, not only on the live cattle front, but also on the boxed beef trade. So at one stage they were our fourth largest beef market, taking over 50,000 tonnes. Now it's back to about 25,000 tonnes, and that's hard to go and find another market for that product that we're not sending there. However, China and the Middle East are two regions that are taking up a lot more of our product, which is fantastic, because if you want to sell product, you want to sell it into markets where there's a growing population and growing incomes. It's not a bad little set of tools to be selling into. So they're certainly taking more volumes, and China for the last 6 consecutive months, record volumes. We've gone from sending 7,000 tonnes in a year to sending 12,000 tonnes in a month. So the growth there has been quite phenomenal. The situation in the US, it'll eventually kick in. Low cattle herd, 60-year low, 60-year low calf crop. Sooner or later, they're going to wake up and realise we don't have enough beef. Where are we going to get it from? In Australia, we've got an FTA, we've got a great situation to be selling product in there, but again, it's mostly frozen product. Consumer demand for chilled beef remains a concern. And even here in Australia, I think. Globally, the economy's looking ordinary, consumers are worried, so you don't spend as much money on nearly everything, and chilled beef is more expensive. So consumers there are going, I'm pulling back, I'm going to eat beef, but I'm going to go and eat frozen beef, I'm going to go and eat a hamburger, I'm going to eat mince, or a cheaper alternative than the top cuts that we'd all love to sit down to, I assume being served tonight at the dinner. The Australian dollar, look, I could talk for the half hour alone on the impacts of the Australian dollar, and I've got some slides here that will really show the impact. But if you put things back in the US cents a pound terms, which is what mostly is traded in, global beef prices have never been higher. The problem is, over that same period where those prices have doubled, guess what our dollar's done? It's doubled. We've nearly just kept the head above water there on those returns. So look, I love my maps. It's a running joke in the office, but it really shows you. If I was to show you a map from January 2010 to maybe March 2012, just blue, wet, wettest on record. For a 2-year period there, it was the wettest 2 years ever in Australia. So we saw the rebuilding, but what we've really seen is this shift in the last 9 months. So this shows the last 9 months of rainfall across Australia. And you can really see a bit of the haves and have-nots there, that eastern coastal fringe of Queensland and New South Wales, and even a bit of the northern tablelands there, average to above average rainfall. Sorry. That's all right. I need to take a breath. Don't know how the golf went, did we? It's certainly dry, and I think the real big concern, and we're seeing it now, is this what's effectively been a very poor wet season. So if you want to take it all the way back to the live export issue where we saw a big pullback on the number of cattle that were able to go out of Australia, it was matched by those really wet years. So there was that ability to hold those cattle onto because the feed was there. But what we've seen, a poor wet season now, a lot of cattle coming out of the west. Properties in the east are well stocked. They can't take any more cattle. So we're really seeing those numbers come through in the slaughter. And as a result of that, we've killed about 85,000 head extra so far in 2013 in the first 10 weeks of this year. That's effectively an extra week's kill. That's in Queensland. When I talk about these numbers, this is in Queensland, this is eastern states, sorry, but we're talking an extra whole week of Queensland's kill has already come through the market. And that's the back of the high herd and numbers coming out of the west. We expect to see that to continue pretty much right through for the first 6 months of this year. Because one, we're working off a low point from last year, but two, the cattle are coming. We know the wet season's already stopped. It's going to be a hard year for a lot of Queensland producers. And Australian adult monthly cattle slaughter, look, this is dated back, so we've only just got February, but you can see here, where's my pointer? Through this period here, that was the wet period. So we saw a lot of months there where we had nearly double-digit year-on-year declines in slaughter, and it was mostly females. Females were very scarce there through that 2 and a bit year period, and that was that rebuilding, whereas now we've entered this period where we're not only seeing cattle come in, we're seeing them come in at some pretty big numbers, and we expect, as I said, to see that continue. So when you're reading your reports and just talking to one of my guys in the office today, he's been talking to the processors. They've still got a lot of numbers coming in, and it's putting pressure on prices. It'll continue to put pressure on prices, I think, until we see a really good southern rainfall event, which will signal hopefully a very good autumn rain for New South Wales and Victoria and South Australia. So moving on to the cattle herd, and look, I think if I was to go and do my forecast now, you can't do them every day, because that would make you a weatherman. You do your forecasts every 6 months, because at least things can change over that time. But I think we've probably seen the cattle herd topping out at around 30 million head. As I said, that's a big cattle herd, and the big point I'd make there is over half of that cattle herd now is above the Queensland border. They're Northern Australian cattle. Whereas if we go back to when the cattle herd was last at that level, over 60% of those cattle are in New South Wales and Victoria and South Australia. So we really also seen a demographic shift in where the cattle are in Australia. That herd is northern based. Will that continue, that growth? I think we might see it stabilise at around sort of 52%, I think, is Queensland and Northern Territory's herd. But I don't think we're going to see the growth in the southern herd as well. So I think the competition from other enterprises there, particularly in recent years from prime land production, has certainly seen that growth of those southern numbers stabilise. We expect to see the herd slowly taper off into 2016, 2017. And really that's a forecast of seasonal conditions, but also, once you've got to cull those numbers out to go again, it's the cyclical nature for those that have been around. There's the cattle cycle that comes into play. So on the demand, I'll just wrap up there. So on the supply side, look, we expect to see more cattle coming in. And we would have expected to see more cattle coming in anyway, even if it was a wet year again. Because you just can't keep rebuilding forever. But the dry year has certainly accentuated the number of cattle we expect to see to come in the first 6 months of this year. And that's the big point to make, the first 6 months of this year. For the next 6 months, we need to see what the season's doing, but also we will have seen a lot of cattle cleared out by then. And normally what you see is, when you see big numbers like this come in, it creates a hole somewhere, traditionally. So we are expecting to also see a period where supply might become a bit tight for a few months, because so many cattle have come forward. To where that hole becomes depends on what the season does. If we go to the demand side of things, where I said there's a concern over the demand, and I probably should have phrased it as there's a concern over the demand for chilled beef, the high-valued, premium animal that we all strive to produce. Selling that top-quality product has been tough going, pretty much since the GFC in 2008. Consumers are scared, and on top of that, let's go and throw $1 over parity, which makes our product even more expensive for them to consume. But even though we've seen this dollar, and I think if you had stood in a room like this 10 years ago and said, what do you do when the dollar goes above parity? When it was at 48 cents, everyone would say, oh, industry's shot, it's gone, it's over. We exported more beef last year than any other year than we've ever done, 963,000 tonnes. So we can still sell it. There is no problem with markets wanting our product. It's what they're willing to pay for it that's the catch. So what we saw last year was a record volume, up 2.5%, but the value we received for it was down 3%. And again, there was a big shift. If we go back to 2005, where we had Japan all to ourselves, we were selling cuts into those markets, into Japan and Korea, no problem at all. What we've seen in 2012, what made up that record volume was a record amount of manufacturing beef, effectively product in the processing, going into grinders, because that's where the return was. To put it into manufacturing packs to sell to fast food outlets, to make hamburgers with. That's where the record price was. It wasn't for well-finished, loins and cube rolls into Japan. We expect to see those exports continuing to grow. We don't see the world not wanting our beef anytime soon. However, like anything, there's a price that they'll pay for it. The major destinations, very little growth in Japan. So there's 2001, 2011, 2012, and our forecast for 2013. Out of all the markets, and we're not talking about beef here, we're talking about general economies and markets that have probably had a pretty tough run the last 2 years, Japan's at the top of the list. Their economy's stuffed, tough, I should say. You get an earthquake, you get radioactive beef in the market, got all these other concerns that just the consumer is just doesn't want to know about paying a high price for Australian beef. The US, I mean, have a look how much beef we used to send to the US nearly over 10 years ago. It was our biggest market by volume. Last year, or 2011, was our lowest volume since 1966. Because one, they had a very severe drought, so their own production. But we have these other markets saying, you know what, we can outpay the US for product, which was a great situation to be in. They were effectively outbidding the biggest market for product. Korea, a very valuable market, but the big growth is in this other. And I'll just talk about these other markets a bit now. So you have a look back here in 04, 05, we were sending 93% of all our beef to 3 markets: the US, Japan and Korea. It's not putting all your steaks in one basket, but, you know, fortunately for the Australian industry at that time, there was the US BSE and trade distortion there. Now we're sending over 30% of our beef to other markets. So there's a lot more markets wanting our product. So over the long term, that's certainly a nice situation to be in. You want as many people wanting your product as possible. And when you have a look at the type of product they're taking, so we've gone back and done for the last 12 years, and you have a look at China here, very, very little beef here. In 2012, whack. But again, if you point out, the blue is manufacturing beef, or lower valued cuts as we call them. Whereas the red is other, that is chilled product, that is what we would call high valued premium cuts of meat. And you can see where the growth has come from. The Middle East, they take a bit more of a split than the other markets, but all this growth from Russia, Southeast Asia, China, has been for manufacturing or lesser cuts. Because that's what their consumer wants. Yes, they're getting wealthier, yes, their population's growing, but they certainly don't have the ability yet, or the diet yet, to purchase beef cuts like Japan does. You know, so we're looking at a market that really, they're developing, and markets traditionally develop by taking the lower valued cuts and working their way up the chain. But we're certainly seeing a situation where it's this manufacturing beef that is the hot item. And there's China. So you have a look along here, just, you know, a good month to China used to be 500 tonnes in a month. And all of a sudden, whack. So, you know, we're hoping to see this growth continue, but what we really would love to see is this growth of the red to continue. Because we want them buying our higher valued product. So I talked about the dollar. World beef prices have risen in US cents a pound. They've almost doubled. If you have a look here, back from 2000, so the red line is what the world pays for beef in US cents a pound, pretty much the standard traded product. And the blue line is what we get for it in Australian cents a kilogram. And you can see here the difference. And it nearly goes to that old one that, you know, we haven't seen cattle prices move in 10 years or 20 years or 30 years, depending where you want to draw the line. But here, this really helps explain it, because in US cents a pound terms, things have never been higher. Whereas when we put that old Aussie dollar, which has doubled over that same period, returns are good, but gee, they certainly haven't reflected a global market that has a shortage of beef. So, and just to point out, that's for manufacturing beef. That's for that, what I'm calling the hot product. If we go to the chilled strip loin, a really nice cut of meat, the same again. We've actually seen a decline. So the US cents a pound terms, almost doubled, if not more than doubled. So if you want to look at it in terms of the US, exporters are getting almost twice what they used to for their product. Whereas for Australian exporters, the dollar's doubled and returns have fallen. Because not only are you selling top product into a market that is doing it tough for their consumer, the dollar just makes it all the more difficult to sell it to. So that, I say, would really explain the situation at the moment. Is this really good quality meat that we all strive to produce animals that are top quality? The returns for that have actually fallen over the last 12 years because consumers just don't want that product at the moment. Japan, we now send more frozen beef to Japan than we do chilled. A big change in that market, and particularly if we go back to 2008, 2009. Frozen beef, it's more flexible, if you like, in the supply chain, but also it's the consumers in Japan, as I've said several times, they don't want to spend as much much money on protein, so they're going fast food, they're going quick retail, which wants that frozen product. They're not going out to restaurants and eating this top quality chilled product, which they used to do back in the late 90s and early 2000s. Korea, a market that flies under the radar somewhat, but a market that really has captured a bit of headlines because we've seen a decline in shipments But there's this free trade agreement, and I'm sure all of you are aware of. The US have a free trade agreement with Korea, which every year drops their tariff into that market by 2.67%. And we don't have one. So every year that we don't have an FTA with Korea, US product gets cheaper, which means the Korean consumer is probably going to favour US product. So this is certainly an area that we've been looking at quite closely, because whilst only 5% difference at the moment can be made up on exchange rates, if this continues, we're starting to open up a big difference between what Korean importers can pay for US beef at a cheaper price to what they can pay for Australian beef, which is at a 40% tariff. The US, and trying to finish on a positive, the US, as I said here, our lowest exports there since 1966, because other markets were buying it, but also the US was producing a lot themselves. We saw a big increase in 2012, and we expect to see another big increase in 2013. But again, frozen beef. But the US cattle herd, and as I said, one of the real big things that underpins my confidence for looking ahead for the next few years is the situation the US finds it in. They're our major competitor into Japan and Korea. They're also our second largest market, but they're also the world's biggest producer of beef. So what goes on there has an effect here, has an effect everywhere. So their cattle herd, 60-year low, their calf crop, 55-year low, I think. And if you have a look at the decline in production they expect for this year, they're talking about 500,000 tonnes. Now in the US, when you're producing 12 million tonnes, that's 4 or 5%. Here, that's the equivalent of New South Wales and Victoria's annual production. It's a hell of a lot of beef. The difference is, they've got a hell of a big market as well to sell that product into. When you've got 400 million consumers looking for that product, they quickly run out of it. So there is certainly a shortage in that market. When we have a look at US cattle prices, they are predicted to go even higher into 2014. There is a correlation between Australian cattle prices and US cattle prices. The dollar makes that correlation a bit weaker, but when we look at the US situation where they are expecting to pay more for their cattle, that flows right through their system to mean their beef will cost more to every overseas market. And I certainly think that's a positive that the Australian industry will be able to benefit from. When you have a look at the price of their beef, we're currently at about here. We expect that price to go even higher. Again, that frozen product is the hot product. So demand, there's some markets that are doing very, very well. And there's some markets that we're really still waiting to feel the kick of, like the US. And all the US needs is a nice dump of rain, their drought to subside a bit, and we're going to see a real big contraction in the amount of cows they're killing particularly, and that's where they'll come knocking on Australia's door for more product. So just wrapping up on the major issues and just having a look at the clock to leave some time for any questions, I think the major issue, and it's a constant issue, is the profitability of the industry. And as we said, it's a low margin industry, right through the chain. But especially at the moment, if we're looking at anywhere northern Australia, that live export, everything tied up in with that, makes the profitability question a big concern. You have a look at the two big drivers of the Australian beef industry, the dollar and the season. Nothing we can do about them. But gee, they're a concern. And they continue to be a concern. We're only talking just before we start about how often you can look at a 10-day rainfall map before you start to get indoctrinated and believe it. But certainly, that seasonal conditions, whether it's a dry year or a hot year, depends who you listen to, depends what you think. But certainly that is the big issue at the moment. It looks like being a dry year, particularly for the bulk of cattle country. A real long-term burner that we've got is we continue to see our competitive position eroded, particularly in North Asia. So whether it's a free trade agreement that the US has with Korea and we don't, whether it's an increase in the age eligibility of US beef into Japan, which just makes more US beef available, given they've got a weak currency, our competitive position is what it's all about. And that's what's hurting us at the moment, all the way through to the Australian dollar. At 105, trade's difficult. And it's really interesting to watch and talk with the exporters. They're sort of saying at parity would be lovely. Just give us parity. Dollar. You're sort of saying, you're serious? They're going, yeah, well, geez, we'll take parity over 105. Interesting to see some of the bank's forecasts, and I don't know which one it is. I don't know if it's Commonwealth or not. But we're talking about the dollar being down at low 90s by the end of this year. Gee, that'd be great. You'd probably take that over a good season. So there's certainly some bright spots there, but the dollar is really the big headwind that keeps blowing. Lack of demand and price for high quality chilled beef. That's what's eroding the returns for this top quality product. And do we see that turning around? We need to see consumers in Japan and Europe, even though we don't spend much beef there, we need to see those advanced market economies back on track. Has a double benefit. If they get back on track, it'll hopefully push our dollar lower, but also consumers in those markets will start to be confident again and go and pay more money for top quality chilled beef, which we need them to do. The live export issue is obviously one that continues to burn, and it's related to that first dot point. And whilst Indonesia keeps this limit on the amount of cattle they'll take each year, it'll continue to be a big issue. And just finishing off on some real longer term issues that we face. Now, I've said all along that the hot item at the moment is low priced frozen beef. No one ships more of it than India. Their exports this year are expected to increase 30%. So just to put that in context, each year Australia and Brazil and the US in any given year will battle for the mantle of the world's biggest beef exporter at about 1.4 million tonnes carcass weight. So that's as the carcass hanging up. India, just tracking along underneath us, this year they'll do 2.1 million tonnes. They go from 1.4 last year to 2.1 million. So they blow us away by almost 700,000 tonnes. So it's a huge concern. At the moment, they don't have the access into the markets that we have because they've got foot and mouth disease. They send a lot of their product, if you like, disperses into the countries surrounding India, particularly into North Africa and the Middle East. A lot of product goes into there. A lot of product goes through some grey channels. We used to go through some grey channels into China. But certainly one that if they get their act into gear and start to get more markets access, they've got a hell of a lot of cattle or buffalo, whatever you want to call it, that they can kill to produce what effectively is low valued protein, low price protein. That's a big one. And also South America. You know, we viewed Argentina a long time ago as the big bogeyman. Are they going to come and wipe us out of our markets? Because they do produce very good beef. But at the moment, Brazil, you know, their percentage of their exports is actually decreasing because they've got this domestic economy that's going pretty well. 220 million consumers who all like to eat 60 kilos of beef a year. They're feeding themselves pretty well, but if we did see a particularly hiccup with their consumers there, they can very quickly put a lot of product into our markets, not necessarily Japan and Korea, but you're talking about Southeast Asia, and I shouldn't say our markets, they're not our markets, they can put it into markets, which has a flow-on effect. But certainly one that we're keeping an eye on, because what happens in South America, when you put the combined power of Argentina, Brazil, Uruguay, Paraguay, there's a hell of a lot of beef produced there. Unfortunately, they're all eating a lot of it at home, which is great. But when they start to export more of it, we really can see an impact of that. So that's all I've got about that. Throw another steak on the barbie, all our marketing campaigns, but I'm happy for any questions if there's time, or